Good morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Well, good morning, and welcome to Investment Talk TV, right here on Sunday, December 6th. This is episode 10. I'm Paul Meyers from Legacy Wealth Management. And as always, I'm pleased to be joined by my partner in crime, our CFP and financial advisor, Brady Brunsvold.
Hey, good morning. Happy to be here. These episodes just keep on coming, don't they? So it's exciting. It's fun to be here. And I love, Paul, getting all the feedback from our email. We've gotten a lot of calls. And thank you guys for putting up with us and all the weirdness and the fun that we like to do. But we also like to be a little bit serious here. And hopefully you get some sort of education while being enjoyed or entertained. So happy to be here, and we're keeping on trucking.
We are keeping on trucking, and you're right about all that viewer comments. We've been getting messages from people all over the Red River Valley and all the way as far west as beyond Jamestown and east quite a ways and all the way up into the Canadian border and down south towards South Dakota. We're going to recount some of those places in just a second, but it's good to be here with you again for episode number 10 of Investment Talk TV. And just a reminder that if you'd like to get a hold of us at any time, you can always reach us by telephone at 701-365-8083. Or Brady, what's that email address? Come on, buddy.
It's pretty easy to know. It's teamteam@legacywealthfargo.com. You can, send us questions, answer the trivia that we have every week, which we'll be getting to here in a little bit. Or maybe you have something going on in your life that you're not sure, whether it's an investment goal, or maybe you're planning for the kids, or maybe you want to plan for a vacation. Anything investment related, we are happy to answer. And I know we've been getting a lot of good questions in the mailbag as what we call it, and we'll do our best to try and answer those as they come in too.
We like to think of ourselves some days as kind of the help desk. And like Brady said, anything having to do with investments, we're here for you. And we're able to cover quite a wide area too, Brady. I like to show this map from time to time because it kind of it pinpoints the general areas we're in. It doesn't have all of the specific areas. But, when you include all the way up to Pembina and beyond, Grand Forks, we go east and south towards Battle Lake, Minnesota. I had some nice commentary from some viewers down there. Over to Jamestown and Carrington. Of course, Crookston is in the mix. Fargo-Moorhead naturally is catching a lot of viewers all the way over to Detroit Lakes. And, all of your favorite haunts, Brady. We're getting them all here on Investment Talk TV.
And as we always say, Paul, if you're not able to view on your television, you can go through the magic of the YouTube and search us up, legacywealthfargo.com. Type that in, and you should be able to see all of our previous videos on YouTube. And you can binge watch the whole entire season. Grab some popcorn and put yourself in because it's going to be a fun ride. So we encourage you to do that. And again, if you would like to be featured on one of our segments as far as questions go, shoot us an email and we will get you on the show, as it were.
And another thing that we need to emphasize to our listeners, if you watch the show this morning, or for that matter, any Sunday morning, you watch the show from 10 until 10:30 on WDAY or WDAZ, that's channels 6 and 8 generally, or whatever it happens to be on your particular carrier, but ABC for the Valley. If you're watching WDAY, WDAZ at 10 a.m., hey, you can catch us again at 11:30 on WDAY Extra. Yeah, that should be kind of fun. Or catch us on YouTube. You can make an entire day of it, get a little pot roast and sit down and enjoy yourself.
Better than football.
It should be good. We have a lot of things going on today. The agenda is kind of full, and a quick reminder to some people of a couple of things coming up. Next week, we're going to talk a little bit more about tax loss harvesting and some of the things that you may want to do during the month of December, because let's face it, here we are in the month of December.
Yes.
We also want to remind people that tomorrow, December 7th, is the deadline, Brady, for Medicare enrollment and changes and things like that. So if that impacts you, you want to make sure that you're in touch with someone who can help you with regard to Medicare concerns. And if you have a question, you can always give us a call at our office as well. Those are two big things we wanted to be sure and mention. It was kind of fun to have some of our listeners mention the concept of required minimum distributions.
Yeah, that's right.
They'd like to hear about that going forward. And let's make a point, Brady, next Sunday of spending some good time on that.
Sounds great.
All right. Today's agenda includes our investment question of the week coming up just in a few minutes. Of course, we'll have our 5 points in 5 minutes. A special feature today that we call Stock versus Stock.
Ooh.
Should be good. It's
Yes.
brand new to the television. And some key items to remember for the month of December. We just mentioned the Medicare enrollment time.
Medicare, tax loss harvesting.
Tax loss harvesting. And then there's an awful lot of companies coming out with their earnings reports this month, as well as many of you may be in a situation where at the end of the year you're retiring or changing your employment situation.
Yes.
And just remember, that's a good time to be giving us a call because we can probably help you with things like 401k rollovers, pension questions. And, one of the things that we haven't mentioned is a lot of times people will get offered a pension buyout. And they don't really know how to figure out, well, is this a good deal or a bad deal? Should I take it in a lump sum? Should I spread it out over the next 20 years or what?
Yeah, and, those, figuring those calculations can be really, complicated if you let it. And the same thing goes if you're retiring. A lot of people will say, well, should I take the pension option? Or, you can do what's sometimes called a lump sum distribution. And, you want to go through some fairly detailed calculations, net present value, and to see which is your best option, because it's not always the same option for every single person. So those are the kinds of things that we can help you with. Even, Paul, if you're not a client of ours, we're happy to do that. And, it's been fun. I've had a lot of random questions from people last few weeks because of the show, asking about individual companies, which we don't necessarily do, but we're happy to do what we can. But, if you have questions and you say, listen, I'm retiring, I don't know what to do, where do I even start? Start with us because we'll at least put you in the right direction.
Yeah, absolutely. Good points, Brady. Well, let's take a look at our first major segment. We call it the investment question of the week.
It's now time for the Legacy Wealth Management question of the week.
Well, last week our question was a toughie, Brady. It was a three-parter.
Yes.
You want to kind of summarize what that three-part question was?
All right, I'll read it off just to remind you out there. Who has just been nominated to the Secretary of the Treasury? What was the person's position most recently over in the Obama administration? And who is the current Secretary of the Treasury? So a three-part question. And you know what? We had a ton of correct answers.
We had a ton of them. And didn't I promise last week that I was going to send like 5 people prizes if they guessed it right?
Yes, we randomly selected from 5 people of the winning answers because there were some that were not correct. And we have 5 people that are going to receive some fun gift cards. And, we're doing our part. Some of these bars and restaurants that are not fully functional, we're trying to pick up some gift cards to help support them. And hopefully, the winners are able to take part in that and spend those at some time in the near future.
Very good. Let me mention some of the people who took the time to email us at team@legacywealthfargo.com, and they had the right answer, and they're going to get a gift card. I'm just going to read your first names because you'll know who you are. Lois sent in the correct email. Daryl sent in the correct email. Charles from Hallock also got it right. Lee from Moorhead, and finally Carol from Wahpeton. 5 people. You're all going to get gift cards. We're going to do our best to buy some gift cards from places like Diener's Diner and Porter Creek and some other local establishments, and hopefully you'll get a chance to use those when you can. And we'll try to spread out those gift cards the best we can throughout the viewing area so that if you're in Jamestown and you win, well, we'll try to get you something in Jamestown as well.
Yeah. And, by the way, the correct answer for the question.
It wasn't Rudy Giuliani, was it?
No,
it's not
Janet
Rudy.
Yellen.
Janet Yellen.
She has been nominated by Biden as the new Secretary of Treasury. Previously, of course, the chair of the Fed during the Obama administration. And the current Secretary of Treasury is Steve Mnuchin.
And she is the first woman to become Secretary of the Treasury.
Yeah.
That's a big deal for the glass ceiling concept out there. And we send our congratulations to her, and hopefully she'll get confirmed and get moving on some things. Because you know what? We've still got a stimulus package that needs to get approved here, don't we?
Just a lot of jousting on that, too. I was watching the news this week and going back and forth, and it's more political than it probably should be, or it has been more political.
I know that as we're putting the show together today, the senators and the president and the representatives are getting pretty close to coming to some kind of a deal on that stimulus package. And there's certainly the expectation by many people that when that stimulus package goes through, it's going to be good things not only for individuals and hopefully for combating the virus and helping states out, but it'll probably be good for the market as well. By the way, a little later on, we get a chance to talk about a couple of the big contenders in the area of vaccines, don't we, Brady?
Well, there's a lot of companies that are working hard to, create and distribute COVID vaccines, and they all have their pros and cons as far as how much can they get out, are there requirements for storage and transportation, and the companies that do the best job of this probably have a pretty good shot of making a lot of money, which might translate into a stock price. So definitely worth talking about. We don't know the future, but we'll discuss that in one of our next segments.
Brady, the segment we're in right now is our investment question of the week.
Yes.
And we haven't announced what that question is.
Oh.
Do you want to do the honors on that?
Yeah, I will. Here's the question. Of all the economic sectors out there, we talked about that last week, by the way, which sector has been the worst performing sector over the past 10 years?
Wow.
It might not be as obvious as you think, but if you think you know the answer, what is the worst performing sector over the past 10 years? Send your answers to team@legacywealthfargo.com, your name and whatever information. And, if you have a second question, you want to know anything, let us know. But send your answers to team@legacywealthfargo.com, and we will select the winner from the correct answers next week and announce it on the air.
That should be fun. We cover a lot of things here during Investment Talk TV. And just a reminder, of course, that you can also catch us live on the radio on both KFYR 550 in Bismarck and KFGO 790 in Fargo, really all across the state of North Dakota, a good portion of Minnesota, a good deal of South Dakota, and frankly, all over the country on the internet if you want to. That show is on from 8:35 till 9:30 every Sunday morning. So you've already missed it for today, but you can go on the KFGO and catch the podcast later on today if you are aware of exactly how to do that. But in any case, Brady, we have a lot of things we want to talk about, but I think that it's probably appropriate at this time to talk about some of the trends that are moving the economy and the market. Because we keep saying this is an inflection point. Big things are happening in the market right now. I mean, just take a look at where the market has been so far this year, the ups and downs. Let's take a look at those economic trends in a segment we call 5 Points in 5 minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this 5 Points in 5 minutes.
Well, there are a lot of things to keep in mind with regard to 5 points in 5 minutes. The first one is a review of how the S&P 500 has done recently, and I think many listeners may find this somewhat surprising. The S&P 500 gained 11.4% in the month of November. Now, that's total return through 11/27/2020. That's a performance better than 99.7% of the last 360 months. What is that?
Wow.
30 years.
Yeah.
Holy cow.
Long time.
That's according to our assistant from BTN Research, Mick Higley, who helps us put together some of this information.
Yes.
What do you got for number 2, Brady?
Number 2, from March 23rd of this year, the bear market low of $23.4 trillion, the total capitalization of all the U.S. stock market, it has climbed $16.4 trillion to $39.8 trillion as of the close of last Friday, the 27th. So what a recovery we've seen this year from the extreme lows in March to just recently.
And, we know at Legacy Wealth Management that the pursuit of money and the pursuit of the stock market is not the only thing on people's minds, and it shouldn't be. Certainly health and family and general overall welfare of the country is pretty important. But nevertheless, one of the things we look at is the assets of individuals and families around the country. And one of the things we discovered is that 62% of the average net worth of an American household comes from just 2 assets: the equity they have built up in their home and the value of their retirement accounts. 2 very important assets. And that's why at Legacy, when you come in to talk to us, we're pretty concentrated on those 2 items as well.
Yeah. All right. Well, the next point here, $250,000 of taxable income on a joint return this year creates approximately $48,159 of federal income tax. $250,000 of taxable income on a joint return back in 2010 created $60,281 in federal income tax. So certainly a change for the better for a lot of people over the past 10 years.
And probably helps to explain why the federal government is running such big deficits.
Yeah,
Absolutely.
it's not free.
Hey, here's a topic that we said we're going to be talking about a little more next week, but it becomes our fifth point today because we are in December. And that is that the month of December is an important month for investors because it's often a time when that investor can survey his or her regular investment accounts and look for gains or losses among the investments. Now, selling an investment that's a loss is often called tax loss harvesting, as it can help offset taxes due from taxable gains during this year. A very important item, isn't it, Brady, as we're doing planning for the end of the year?
Yeah, I think it's an important topic where we'll spend some time next week going through the ins and outs as far as long-term, short-term capital gains. How does that affect you? Can you carry some of those losses forward, which you can, by the way.
Good.
And so we'll talk more about that and how it might be able to help your financial situation.
Brady, we get to do some fun things from time to time on Investment Talk TV, and we do some fun things on our Investment Talk radio show as well. We do believe that investing is serious business, but last week we got to have one of our favorite analysts and consultants make a guest appearance, a guy by the name of Sorcerer Steve, the Wizard of Wall Street. There he is in full color.
Good-looking fella.
He is. I'll tell you what, the guy's got the hair and the beard to go for it. He had the magic wand, the crystal ball, and it was a treat to have him on the air. If you missed that, of course, you can always catch it on YouTube. But let's summarize some of the key points that he made while he was here.
Yeah. Well, one of the big ones was the outlook on technology, how it's done so well up to this year, or up to this date this year. And we think, technology still has a spot to outperform going forward with his help of his crystal ball.
Some people think that technology, it's all going to revolve away from technology, but I just don't see that happening myself.
We're such a technology-based world.
We are, and it's going to be even more in the future. Yeah. Item number 2 that he mentioned was the future of electric cars. And, of course, companies like Tesla and NIO and some of the others, it would appear as if that whole appetite for non-gasoline-based cars is going to increase as we go forward.
Absolutely. And, of course, the vaccines coming, and I think, the expectation of once the vaccines are in place, they're being distributed, that will help the overall optimism of the United States economy and really lead to a lot of rebuilding and prosperity.
But, Brady, one area that the Sorcerer missed.
He did. He missed.
Yeah, I missed it big time, and that was the result of the Viking football game.
Ugh,
what a game.
Yeah, heartbreak team. Jeez.
Well, they lose.
Hate to
they
love
lose
them.
the previous week when they should have won.
Yep.
And then last week they just about gave away the game.
Yeah.
And I guess we'll have to see what happens this Sunday.
Yep.
But
we'll see.
I'm glad they won last week. That was a good deal.
Yeah.
That was a kind of an exciting thing. After our TV show, we got to settle in and watch the Vikings win a football game.
Not
That's
a bad
pretty good
Sunday.
deal.
A little chilly maybe, and makes for a nice afternoon. Paul, speaking of next segments, one of the things that we like to do, we like to talk with our clients about asset diversification, asset allocation, and that includes things like exchange-traded funds or ETFs. It includes mutual funds. And sometimes, depending on the clients, of course, we like to look at individual companies or individual stocks, individual equities, what do you want to refer them to. But one of the things we want to talk about today is individual companies, and we have this special segment pitting those companies against each other and seeing which one comes out on top.
And we call that stock versus stock.
Like two fighters in the ring, different companies often square off against each other and compete for attention in the stock market. Today, Legacy Wealth Management compares and contrasts a couple of heavyweights as we present Stock versus Stock.
Wow, now there's an introduction to lead us into comparing two companies against each other, stock versus stock, and that's what we're going to have a chance to do today. A reminder that at no time during our broadcasts are we really recommending an individual stock. Now, we do that when you come in and visit us in person because then we get a chance to know you, know who you are, know what your goals and interests are and your capabilities. And on the show, we just like to highlight some of the stocks that are doing well and what they've been doing. And Brady,
yes,
let's talk about that first one, Pfizer Pharmaceutical Company.
Well, Pfizer is, as you know, one of the large pharmaceutical companies that has created a vaccine for COVID. They've obtained approval here in the States and over in Europe just recently this week. And it's an interesting company. Here's a chart for the 2-year period. If you might notice, it really isn't up that much as you might want it to be, considering the news that they've had. But this company, Pfizer's been around forever, Paul. They've been around since 1849.
Wow.
Yeah.
I remember when they started.
Yeah, just a little pup back then, But long time they've been around, and they're the world's largest drug maker out there by sales. So they are huge. And I think the biggest thing to know about Pfizer is that they have created a huge channel that allows them to distribute products in a very quick manner. And when you're thinking about millions and millions of doses of a potential vaccine, that's probably a pretty good thing. They mentioned, Paul, 50 million doses available by the end of the year if needed.
Wow.
So that's a pretty good production. I think actually technically AstraZeneca has one that's 200 million doses available by the end of the year. So there's another player there. We're not going to talk about them today, but just one more to keep an eye on. The other company, Paul, Moderna. I think we have a 2-year chart for them as well, if we could pull that up. But basically, Moderna is a lot newer of a company. They've only been around since 2010, Paul. And as you can see here, quite a different looking chart, especially this year. I believe this year Moderna is up something like 650%, something like that.
Yeah, they were. I think they were $20-some a share around early January, and now they're considerably higher, 140 or so?
Yeah, something like that. So really, really taken off. And Moderna and Pfizer are both using the same technology when it comes to the vaccine. mRNA is what it's based on. But they're small, they're more agile, and they're really, really focused on developing new products. So they were, one of the first ones to the market, even though they haven't been around nearly as long as Pfizer. But like I mentioned, because they're so small, because they're so focused, 20 million doses is all they can manufacture before the end of the year. So a lot smaller on the manufacturing side, even though they're able to create products and get to market faster. But geez, the price differences, you look at Pfizer on that chart, basically flat throughout the year. And Moderna is up 600%. What a difference.
Approaching $150 as we're putting together the show today for Moderna, and they're up considerably. They do tend to ride the seesaw, though, don't they? They're up and
it's
down.
not a straight line.
It's volatile. They go up, they go down, and depending upon what the public announcement, it becomes very much a game of politics and public relations, which is too bad because we're dealing with healthcare in the United States, and probably not something that we need to make into a political game so much.
Lots of money involved, that's for sure.
Lots of money involved, and kind of interesting to do a comparison between Moderna and Pfizer. And you were saying, actually, there's a lot of other companies who are on the front line of possibly, I'm familiar with Inovio, for example. We're not recommending any of these. Inovio, Novavax is also out there. AstraZeneca.
They're based, I think, in Great Britain, I believe.
Yes.
Or they're in conjunction with Oxford, something like
right.
that. But, all of these combined, the point is lots and lots of vaccine becoming quickly available once it's, allowed to be released to the public. And 95% efficacy. That's a big word. I got to be careful on that one. But that's a really good sign because, people are still dying. We're still hitting record deaths every single day. And the faster that we can get this out, Paul, the better it is for the stock market. Why? Because there's more optimism, businesses will reopen, and everything will go back to the way it was. So we are obviously interested in seeing which of these companies performs to help get us to that point.
Brady, I saw a statistic this morning that was very sobering, and it was comparing the United States to Japan. And I think Japan has somewhat less than the United States in terms of population.
Yeah.
I think they're maybe about 40% of where we're at, and I could be wrong there, but pretty close to 40%. And yet, do you know how many deaths they have from the COVID virus?
How many?
About 2,300.
Wow.
And here we are, well over 200,000 now. About 275,000. Yeah. And obviously, the Japanese are doing something right over there that needs to be replicated here in this country. It isn't. Yeah. I think people are foolish if they think, well, we're just going to wait for the vaccine and everything will be just fine, because an awful lot of people are not going to make it until the vaccine gets here.
Yeah, and one of those things I always worry about too is the transparency. How much are, especially China, are they telling us the full story of what's going on over there? Are they coloring that with a rose-colored lens? What's the story? But all I know is people are still dying, and once that gets solved, we could be in for a pretty nice little market rebound just on the optimism alone. So we're waiting for that day.
You're right, and I think people are feeling that optimism. In fact, speaking of that, let's take a look at the stock market week in review, because we've got some interesting charts here that show, I think, the Dow Jones over the last week, and then we'll take a look at the NASDAQ over the last week as well. Let's first of all take a look at this Dow Jones index. Look at that, Brady. Quite a jump here about a week ago as the market's really zigzagging a little bit, but basically bouncing off that 30,000 point on the Dow Jones.
Yeah, a little bit of a line of resistance there. And, I think people or investors anyway, are kind of watching. They're watching to see what happens here, because you have one side increasing numbers of infected, and the other side you have increasing vaccine progress. And until one of those pulls ahead, the market has kind of been following that trend. So that's what you're seeing here. We're somewhat in an idle pattern.
Now, some people say, of course, that the blue chip, large U.S. companies, even the bricks and mortar, are going to come back and do a lot better than the technology. Let's take a look at that NASDAQ chart. And you know what? I don't see any big weaknesses there, do you?
Looks pretty good. I mean, that's since the beginning of November, I believe. And what a jump initially in November. Went down a bit as virus numbers increased. But, geez, it's been trucking up the whole time. And so it's really fun to watch that technology has, in fact, continued to be strong throughout the whole month.
Yeah, good things ahead. And, in the closing minute or so that we have left of today's Investment Talk TV, a couple of things I want to point out. Our broadcast is covering a wide area of North Dakota and Minnesota and into South Dakota, all the way up into Canada, for that matter. And it's also available, of course, on YouTube all over the country. What I do want to emphasize is that we are a local firm. We're right here in the middle of the Red River Valley, not very far from wherever you might be. And we travel. We'll go to meet you. We'll catch you on a Zoom conference. We'll talk to you on the phone. You can come into our office, whatever you'd like to. And I'm proud of the fact that both Brady and I, and for that matter, the other people in the office, and there's quite a few of them, we're all from around this area, Brady. You were born and raised in this area.
Yeah. And, one of the things that we always hear from listeners out there is I'm trying to get a hold of my advisor, and I have this 800 number, and every time I call it, it's a different person. And we joke about it, 1-800, whoever answers the phone. But there's a lot of truth to that, Paul, that it's nice to know who you're with. And when you have a question, you know where we are and how to get a hold of us. And that means a lot. So if you do have questions, even if you're not a client, like I said, give us a call. We're happy to talk to you, and maybe you can come in, have a cup of coffee, or maybe we can have a taco over lunch, or whatever the case might be. But don't be afraid to ask, or even email us if you don't want to, talk face to face, because that's
and just because you come in to see us doesn't mean you have to become a client of ours or transfer your accounts around anywhere. But we think knowledge is power, and the more you know, the better off you can do, and the better your retirement may shape up to be. Well, that's bringing us to the end of the show today. I can hear the music in the background. Brady's playing the guitar, and we're getting set to wind it up. Thanks so much for listening and watching Investment Talk TV. Don't forget to send us an email if you want to enter our contest, and listen to our radio show every Sunday morning. Until then, I'm Paul Meyers from Legacy Wealth Management, joined by Brady Brunsvold. We'll see you again next Sunday.